Over the last 20 days of being on the road, the conversations have been about 3% and 5%. So people have dramatically scaled up their exposure. The road trip left me confident that we're going to see inflows into these ETFs for multiple years, and that they're going to far exceed what people expected before the launch. We're talking about, I expect we'll see $100 billion plus in these products in a matter of time. Look, Bitcoin provides a service. The service it provides is that you can store wealth without relying on any financial intermediary and in a manner that's outside of the fiat currency system. You may not want that service. I may not want that service living here in California, but there are millions of people around the world who evidently do. They want to be able to store wealth without relying on a centralized institution. What breaks people's minds and breaks Wall Street models is you can't pay a fee for that service. From a micro perspective, of course, it has huge amounts of benefits in terms of efficiency, lowering costs, bringing the financial ecosystem into a more modern world, allowing everyone around the world to tap into that financial system through a cell phone. It has beautiful inclusionary benefits as well. The problem with fiat systems is that eventually they all fail. When you go down the chain, they build up too much debt, they print too much money, and they end up collapsing, and that's horrible for society.
Welcome, Matt. I'm so psyched to have you on again. You're the trusted voice of stability and reason in the Bitcoin and crypto world based on your consistency. The report that you wrote for the CFA Institute, what was that, 21?
Yeah, I think that's right. Yeah, a while ago.
And your ongoing commentary about what professional registered investment advisors are doing and thinking in today's world. And Bitwise sought to educate that group of people, and the results of the ETF launch speak for themselves. But today I'd love to talk a little bit about what Bitwise is, and what you've learned since January 11th when we last spoke, the day of the ETF launch.
Mm-hmm.
And how beliefs in the IRA workforce are changing, if at all. And what do you think the hurdles are for Bitcoin adoption going forward? And then the big picture. What does Bitcoin represent and all of crypto represent in the history of finance, or in any context that you'd like to put it into?
Oh, I love it. What great topics. Thanks for having me back. This is going to be really fun.
Awesome. Well, take it away. Well, tell us a little bit about Bitwise.
100%. I would love to. Bitwise is a specialist crypto asset manager. We were founded in 2017, best known for creating the world's first crypto index fund, and today running one of the larger Bitcoin ETFs, BITB. I think what makes Bitwise unique in the world is that we were formed and have built our company around serving professional investors, primarily registered investment advisors, financial advisors, and family offices, and to some degree institutions, but helping that market gain exposure to and understand the Bitcoin and crypto markets. If you think about crypto big picture, there are a lot of people who serve self-directed retail investors. There are a lot of people who serve institutions. There are relatively few firms that have focused on that middle, that wealth management group, and they control about 40% of all the wealth in America. And so that's our audience. We've been speaking to them for 7 years. Those conversations have accelerated, certainly, since the launch of the Bitcoin ETFs on January 11th. And, today we manage $3.5 billion and growing. And it's a privileged position to be in. I really enjoy it.
Well, one person that I know who's served that community for a long time told me that he didn't think that community had much loyalty. And I must say that I think that the launch of the Bitwise ETF, BITB, has disproven that, because I think you all must be the largest fund of the assets gathered without placing them, meaning Fidelity and BlackRock have lots of funds that are actually absorbing and buying some of the ETFs that they're launching, but you don't have that.
We've been really pleased. Obviously, when you go up against two giant firms like Fidelity and BlackRock, that they're going to get their share of the assets. But BITB, our ETF, is the eighth fastest growing ETF of all time. It's growing faster than the gold ETF grew over its first 50 days in the market. So I think our audience, wants to work with a specialist. They want someone that's an expert in this space. They want someone that can help them answer their questions. And yeah, they have been loyal to Bitwise. And, we continue to have even and steady flows. I think we did $100 million plus last week. I'm hopeful that we'll repeat that again this week. So it's been phenomenal to see. And I think we're just getting started. I think BITB will eventually be a $10 billion plus product. And we're on our way to making that a reality.
That's great. And last week, it's noteworthy that there were only 80% of the days.
That's right. Yes. Despite a shortened week, although it was nice to have that holiday, I will say personally, I was ready for a little break.
I
But
imagine.
yeah,
So, and that brings up, you've been on the road for 20 days. And what is it that is changing? Particularly because the survey that you all put out at the end of last year was really, really remarkable in
mhm.
the statistics it was uncovering. And it showed, for instance, and you mentioned the other day at the Bitcoin Investor Day that there were more RIAs were coming to you than were necessarily their clients coming to them, meaning that this group is seeking to be educated so that they can be of service to their customers. So what's changed since that survey, if anything?
Oh my God, so much has changed since that survey. It's been amazing. First of all, we did that survey in December, right? And November, just a few weeks before Bitcoin ETF was scheduled to launch. And most financial advisors didn't think one would launch in 2024. So one thing that's changed is much to their surprise, after 10 years of the SEC reviewing these ETFs, we have a Bitcoin ETF and now they have to deal with it. And that's a big deal. But I think it's hard to overstate the scale of the shift of mindset that the ETF has created amongst these advisors. I think many thought I can ignore it, and they no longer can do that. Many thought Bitcoin could eventually go to zero. They now accept that that's not going to happen. They have to talk about it in a portfolio. Many thought it wasn't safe or secure, and now they have to recognize that giant firms like BlackRock and Fidelity says this is an important part of the asset class. So we've seen much faster adoption than even we anticipated. And I'll add the other thing that's really changed is the scale of the allocation. Bitwise spent 6 years on the road talking to financial advisors about crypto. And most of those conversations were talking about getting off zero, potentially moving to a 1% allocation. Over the last 20 days of being on the road, the conversations have been about 3% and 5%. So people have dramatically scaled up their exposure. The road trip left me confident that we're going to see inflows into these ETFs for multiple years and that they're going to far exceed what people expected before the launch. We're talking about, I expect we'll see $100 billion plus in these products in a matter of time.
It's amazing how quickly the adoption curve has accelerated. And maybe it's not amazing because once you introduce an ETF, and that was one of the largest barriers that your survey showed and all your work over the years had showed to adoption by retail investors. Just give me an ETF so that I can buy it easily. So you get a lot of casual ownership. So you would expect to see a large surge, but going forward, what do you think? Were there any other things that you picked up on the travels?
Yeah, quite a bit. I mean, I'll say, one thing that's notable about these ETFs, if you exclude GBTC, which had selling for a variety of reasons, including bankrupt states like FTX forced selling out of the asset. So if you exclude that, you just look at the new ETFs or you just look at Bitwise's funds. People bought the ETF when the price went down, right? If you remember after the ETF launch, we went from 50 to below 40. People bought all the way down. They bought on the way up and they bought while it's chopped sideways. And I think one thing people wondered was, were people just making a speculative bet on the launch? Would they be scared off? Would they take profits when it rose? I think people have misinterpreted what people are doing with this ETF. What they're doing is not speculating on Bitcoin going from 50 to $70,000 or $50,000 to $40,000 or even $50,000 to $100,000. What they're doing is saying, I need 3% Bitcoin in my portfolio because it's an important part of the asset allocation process. If you make the analogy to stocks, there are very few people who are like, I'm exiting the S&P 500 because it's up at an all-time high. That's not how people invest in stocks. They invest every month in their 401k and they put 60 or 80% of their money into stocks, and they basically don't look at the valuation for the majority of people. I think the same thing is going to happen in Bitcoin. We've been used to people selling tops. We've been fighting over, decimal points because there were retail traders making short-term trades. These are people allocating for the long term. They almost don't care what the price is. They want to do 3%. They're going to rebalance at the end of the year, and that's it. They're not going to look at it every day. And I think that's been a surprising thing that I picked up on my travels is we have to reframe how we think about Bitcoin from a price chasing asset to an asset allocation asset. And that just has a completely different dynamic that people haven't figured out in the market yet.
There's one other dynamic, and that is I have a few friends in the wealth management business. They happen to work at the wirehouses, Morgan Stanley and Bank of America, et cetera. And they, two of them said, not one of their customers has ever asked them about it, and they think it's a complete, it should not be an investment alternative. And these institutions are sitting on a lot of the total capital. Your market of RIAs is a different market, isn't it?
Mm-hmm.
And that once these institutions turn on, it introduces a whole new capital flow too, doesn't it?
That's exactly right. Yeah, people don't realize about this, about ETFs. When they launch, not everyone can buy them. Retail can buy them, RIAs can buy them because they make their own decisions. But at Morgan Stanley, there's this second approval, which is the due diligence team at Morgan Stanley needs to say it's okay to buy these, or the due diligence team at Wells Fargo or UBS or Merrill Lynch, et cetera. So it's almost like a nuclear key situation, right? You need the SEC approval and the wirehouse platform approval. Those will come over the next 2 quarters, is my guess. They're all going to turn on. And that will be another major leg of flows. Look, I think the market's about 30% open now, and we've gotten, record flows. It's going to open the other 70%. And the questions are going to come from clients. I mean, I hear what those people are saying, but I also tend to trust data over anecdote. And what the data show is these are the most successful ETFs of all time. What the data show is that, tens and maybe 100 plus million Americans own crypto directly. And the data also show that this is a phenomenal asset from an asset allocation perspective. And when you put those three things together, I just don't buy it that no one is going to ask over time. I would add, I come from the ETF industry. You remember the early days of the ETF industry. All these platforms were skeptical of ETFs too, and they didn't want to add them, and they weren't good tools for investing. And now it's basically all that they do. So that will happen here as well. These are entering that space. It will be a new level of flows that we're going to see in the second half of this year.
Mm-hmm. How about so over the next couple of years, a whole lot more of brokered individuals who have accounts at banks and institutions begin to own it. What is as it becomes more generally owned, what role does Bitcoin play in the world?
Oh, what role does it play in the world? That's a great question. I think you can talk about it at two different levels about how Bitcoin makes the world better. One, I'm going to go macro, and then I'll go micro. From a macro perspective, the data is pretty clear, which is that fiat-based systems do a good job in terms of managing economies over short periods of time. If you compare fiat-based economies to historical hard money economies, what you'll see is they have fairly similar levels of growth, but the fiat system has less volatility. And that makes sense because people can step in and do quantitative easing if there's a shock. And you see that reduced volatility. The problem with fiat systems is that eventually they all fail. When you go down the chain, they build up too much debt, they print too much money, and they end up collapsing, and that's horrible for society. One of the beautiful things about Bitcoin is that as it grows and becomes institutionally significant, which I think it's getting to that point, it provides a check and balance on this fiat system. We've sort of always had this binary, fiat or hard money, and they each have their issues. And I love a world where we actually have both. In a great scenario, it will keep the fiat system on track. And then if it goes off track, it will provide a viable alternative. So I think it can lead to a sort of better global macro situation because it solves for the problem of the two systems that we've used in the past. From a micro perspective, of course, it has huge amounts of benefits in terms of efficiency, lowering costs, bringing the financial ecosystem into a more modern world, allowing everyone around the world to tap into that financial system through a cell phone. It has beautiful inclusionary benefits as well. And I like to think about those two things. So I think it puts us in a better macro place. I think it puts us in a better micro place. I think it's just net better for the world.
Indeed, I think it also it empowers individuals to leave the fiat system, and that is not as important in the United States of America, where our fiat is as good as any. It has been.
Mm-hmm.
Um, it applies so much more directly to the countries that are run by dictatorships, where there is an intention to debase currency. And this is why I there are so many of my friends that don't pay attention to Bitcoin because they don't really need to.
That's
And you
right.
have a good system. And whenever I point out that if you look at the adoption rates in Nigeria and Turkey and Argentina, it's so much higher because there's a real absolute need to protect savings from those countries.
This is exactly right. You know, I was having this argument with someone the other day on my road trip who complained about, sort of the classic anti-Bitcoin argument, which is how can it have any value when it doesn't have any cash flow, which is an argument that people make all the time. And my answer to him was like, look, Bitcoin provides a service. The service it provides is that you can store wealth without relying on any financial intermediary and in a manner that's outside of the fiat currency system. You may not want that service. I may not want that service living here in California, but there are millions of people around the world who evidently do. They want to be able to store wealth without relying on a centralized institution. What breaks people's minds and breaks Wall Street models is you can't pay a fee for that service. The only way to access that service is to own Bitcoin. And it doesn't have cash flow because you can't pay a fee to a centralized institution to access a service based on decentralization. It just doesn't work. So Bitcoin provides a service. The only way you can access it is to own the asset. Its value derives from the fact that a lot of people want that service, just like any other service in the world. And I think when you frame it that way, I think it helps people sort of get through the mental chopping block of this lack of cash flow, and it's maybe harder to grasp value here in the US.
Yes. Another one is you can't go buy a cup of coffee with it, so how can it be useful? That's not what the use case. The good term is use case, and unfortunately, Jamie Dimon used fraud is the only use case, and that really has caught on. The number of people who say that to me, it's very high.
Yeah.
And I point out the use case for you may be hard to see. The use case for the people who own it for a reason, and they have a use case. You should go ask them, then you'll find the
Yes.
use case,
Yeah.
especially if you wind up in Nigeria or Turkey.
100%. And people should accept that. There are lots of things that I don't use. I don't use every service around the world. I don't have use for them, but that doesn't mean they don't have value, right? They're
Mhm.
evidently facts on the ground, millions of people who want this use case. And it's easy to imagine why if you put yourself into Turkey right now, right? With huge geopolitical uncertainty, the battle between Erdogan and the new mayor of Istanbul. I mean, it's a tense situation. You could imagine wanting to opt out with a portion of your wealth. And, that is the value, right? That's the service. And the only way you can access it is by owning Bitcoin.
So turning to a slightly different subject, in your experience, you've watched probably many people begin to understand what Bitcoin is and progress to the point where they become, they understand that self-custody is a critical component of it for them,
Mhm.
and that they don't ever want to sell it. And now that we have such an explosion in casual ownership through the ETFs, do you think that the percent of people that begin down the path is going to change? We're seeing this big explosion in casual ownership. Are we going to see an equal explosion in the people that ultimately understand and believe it?
Yeah, definitely. Almost certainly. All historical precedent would suggest so. And I'll give you a specific analogy to our old friend gold, which I know Bitcoin people have mixed opinions about, but does provide a nice analogy. People raised the same question when a gold ETF launched in 2004, because an ETF is an intermediated version of gold. And people thought the value of gold is in self-sovereignty and holding gold bars yourself. So it's a very close analogy. But if you look at what happened, the gold ETF gathered $100 billion of assets, was the most successful ETF launch of all time. And the number of people that hold gold bars and gold coins directly rose 4x over the same time period. I mean, it was an explosion of use because the gold ETF legitimized the asset class and brought more people in. Some people were fine with a financialized version, and some people wanted to access, the pure stuff directly. We're going to see the same thing in crypto. Of course we are. There will be many people who first get accustomed to it in the ETF and then realize that they want to self-sovereign the asset. Crypto knows this. We put up this example like it's make believe. How many people bought their first Bitcoin with a ledger versus through Coinbase? Of course, most people started through Coinbase. It's much easier, lower friction, easier to gain access. And then as they got accustomed to it, they took some of that in a self-sovereign format and held it on their own. You're going to see the same thing in ETFs. This is a literal example of a rising tide lifting all boats.
Well, another one of the Bitcoin companies in a Q&A said that all the statistics that they're seeing leads to the same conclusions. The percent of people that start down the path isn't going to change. And if that's the case, then there is not enough Bitcoin. 21 million isn't enough.
That is definitely my overwhelming takeaway from my road trip was basically that 21 million is not enough. I mean, there's a tidal wave of assets. Wall Street moves, it's a super tanker, it's not a speedboat, and it's just started to turn towards Bitcoin. Uh, I wrote a CIO memo that noted that the global wealth and asset management world is about $100 trillion world. And if we get 1 or 2 or 3% of that moving into Bitcoin, that's $1 or 2 or 3 trillion in net inflows. We've gotten so excited. We've had 12 billion in inflows. That's 1%, right? 1% down, 99% to go. I think it's easy to get lost in that fact as we watch the price, ping between 60 and $70,000. But this is a super tanker, and it's just starting to move.
And for anybody hearing this, you can go listen to Michael Saylor talk about how that's just one of the small asset classes.
That's right.
And it's really a property, and then you can throw in real estate and everything else. Well,
True.
Matt, thank you so much for joining us today. It was great to see you again, and best of luck with your mission.
Thank you so much. Yeah, we appreciate the time, appreciate the support, and it's a great time to be looking at Bitcoin.
Yeah, you guys have done a great job.
Thank you.
Take care, Matt. Thanks.